Hello, everyone. Knox Ridley here, portfolio manager with the IO Fund. And we're going to take a break from our weekly broad market analysis and take a look at Bitcoin. And the reason that we are is because we're tech investors and we like to invest in innovative technologies, and Bitcoin is very high up on that list. We've been investors in Bitcoin with our research since mid-2019 and have navigated it quite well. And the reason that we're talking about Bitcoin today is because we believe that Bitcoin is close to putting in a meaningful low and should see a return to some kind of an uptrend relatively soon from our estimation. So what we're going to do today is I'm going to first show you how unique of an asset Bitcoin is. And then we're going to get into the technical analysis around Bitcoin to give you some ideas of levels to monitor, targets, and what we want to see happen to confirm that this thesis is playing out. So first and foremost, what you're looking at is Bitcoin's price chart going back to 2010. And these colored boxes are showing the big bear markets that have occurred with Bitcoin. There have been three, and we're in the fourth right now. And I want to show you something that's pretty unique here. The first one happened in 2010. Bitcoin saw a 93% drawdown. And within 67 weeks was at all-time highs. So from top to new highs, it was less than 2 years. The other one happened just over 3 years. We saw an 86% drawdown and then a return to new highs from top to bottom just over 3 years. The one a lot of people are familiar with was the 2017 blow off top. That was an 83% drawdown. And with just under 3 years, we saw a return to new highs. And that may not seem like a big deal, but that is a rare feat. An 80% drawdown requires a 400% price increase from the low just to break even. That's asking a lot, and a lot of stocks that have gone through that level of drawdown, some never recover from that. I mean, so just a few examples: Qualcomm and the .com bust saw a 80% drawdown or more. It took 20 years to reclaim that high. Cisco saw an even bigger drawdown. It was a darling back then, and it never reclaimed that high. So these are big moves. And Bitcoin is seeing this level of drawdown and recovery in very short amounts of time. And so here we are in this fourth bear market scenario where we're not quite at 80%, but we think that we could get there. And that would be it for Bitcoin. And we believe we'd see a similar kind of increase from that level, which is what we want to get into. So if we take a look at Bitcoin's chart from the kind of analysis that I do, the technical analysis that I do, I am counting the blow off top of 2017 as a large degree third wave. And that is a third wave in a 5-wave trend that's been playing out for some time. The low in 2018 was your fourth wave, and that puts us in this fifth wave right here. And just visually, you can see we only have 4 waves up off that low. And so to complete this analysis, which I think fits the price information that we have right now, we should see a final fifth wave to a new high. Now, where exactly would that new high be and what we're looking at? This is rough. They're very rough estimations of what this would look like. I would expect us to get to 75,000 at minimum, at maximum up to the 130 range before a really major top occurs within Bitcoin. And so that being said, that sets up this low right now as a viable low and a really good investment opportunity from our perspective if this plays out. So I want to get into some support zones that we're watching that are really important. There's a lot of ways to calculate supports. I found the most effective is using multiple techniques and looking for confluence. This is a technique that I use using Fibonacci analysis. And what you want to do is find confluence zones. So what I'm doing is I'm dividing ranges. And the idea here is that swings are not random. They're built off prior past swings, and there are markers within these swings. And those markers are really gaps and large bars. And so if you use those as your markers, you can find very accurate support and resistance zones. So if we take this large bar right here and subdivide it by Fibonacci, just 61, 50, and 38 Fibonacci retrace levels, And then we find the start of a big trend, which is right here. You see the shelf right here started that third wave. That's going to be our first subdivision. The second one, starting from the same large price bar and finding another key marker. You see this big uptrend right here, this big bar, that started a breakout move right there. That's a key marker. So we're subdividing that range with Fibonacci retracement levels. And the final one we're going to do, starting from the same large red bar, we're going to subdivide down to the COVID low. And the reason is because that was around where this large move occurred in 2019. So that's an important region. And so when we put these together, what we come up with are these confluence zones. And the first one that we have, we need to be doing this on not logarithm, but the price scale, is right here at 15,750, and the second one is at 14,450. And so you put those, I just put lines on my charts, get rid of all that noise. I go back to log scale. The reason I'm doing that is because you get a clearer view of the uptrend pattern that's playing out. So keep these in mind. So that's what Fibonacci is telling us, the levels to watch right now. And if we go to Gann, Gann uses completely different techniques to find these price points. He's more of a master of cycles. And so he'll find cycles within price and within time. And if we start from the top, 45 degrees, 90 degrees, 180 degrees of the first rotation, and 360 is one full rotation. And you can see how these levels will act as support and resistance zones. We did one more rotation of that cycle, and this 360 degrees, the second rotation of the cycle from the top, was very strong support. We just broke it, and we're holding on that 45 degree of the third cycle. And if you look below that, the 90 degrees is 14,480. So Gann is telling us that this is important. Fibonacci is telling us this level is very important. And this is occurring on pretty strong price divergences, right? Telling us that the selling momentum is definitely fading on a large scale. So we know what support zones to look at now, what's very important. The next thing I want to see is this downward structure, is it complete? Or is it at least, close to completing? And from what I can tell is that it is a very full pattern. So this fourth wave, very solid structure, A, B, C, a three-wave move. The C wave is a five-wave move. Let's go down to a 2-day chart and get a better view of the context. 1, 2, 3, 4, and this fifth wave is playing out as a diagonal pattern. And you can see it's happening on less momentum, very common with fifth waves. So if we do break down from here, my target is going to be that 14.5 region. That's where I would be adding more to our position. And we think that would be setting up for a phenomenal buying opportunity. So let's assume the low is in. What's going to let us know that? I'm going to go back to Gann. And one of my favorite tools for determining trends, let's see here, is using Gann fans. And a Gann fan is basically just measurements of time and price. This is a true 45-degree angle. I've actually locked the ratio. So this is a true 45-degree angle. And what you want to do is you want to find the fan that this downtrend is respecting the most. And as you can see, if we put it on the 2021 high right here, that we're seeing that these fans are respected really, really well. And look at this 1-by-1 line. This is the most important when it comes to a trend. In a downtrend, as long as it stays below here, that means the downtrend is intact. And look at every single time we've tried to take it back, complete failure and starting of a new downtrend. And here it happened right here at the FTX situation. We dropped down and it looks like we're going to retest it again. So what I'm looking for is a breakout above this 1-by-1 line. That would be a very strong indication that this thesis that we're talking about is beginning to play out. It'd be a very early sign. And the level we'd be tracking for that would be around, let's see here, around 18.5. So if we can get a break above 18.5, that would be your breakout buy from our estimation. So we're actually putting out a report. It's going to be a free article that we're putting out. We're going to be going through a lot of on-chain metrics that is also confirming from a fundamental standpoint that we're close to some kind of a meaningful low within crypto. Not all crypto, but Bitcoin specifically, and Ethereum as well. The last thing I do want to talk about is Ethereum. We've been putting a lot of our focus on Ethereum, and we've been buying not heavily, but more into Ethereum than Bitcoin. We've been adding more to this position. And one of the reasons is quite simple. This is Bitcoin's price chart in blue, and this is Ethereum, these candles right here. And as you can see, they have diverged quite well. Ethereum bottomed in June of 2022, and Bitcoin just kept going lower. And so whenever I see this, when I see this kind of divergence, more times than not, it's identifying the leader in the next uptrend. And so we think Ethereum, from a fundamental as well as a technical perspective, is setting up to be the leader in this new uptrend, and probably going to get more of a relative performance from Ethereum. But that's just one quick idea that of why we like Ethereum right now and are focusing more on that than Bitcoin. But anyway, we just wanted to show you that analysis, what we're looking at. We do think that we're close to a low. The levels that I would be watching are 14.5. That would be a buying opportunity in our opinion, or a breakout above that 18.5 level. What I do want to say, what would negate this large degree uptrend scenario would be if we break down below this 14.5 level and sustain below there. In other words, if we just break below it and then jump right back above the 15, 16 level, that's no problem. But if we break below that 14.5 and sustain below that, we'll do a follow-up webinar on what we think is playing out. But that would be the stop out zone for anyone that's looking to get an entry. I mean, the risk reward here we think is quite phenomenal with these levels. So we hope that helps. I do a free webinar on YouTube just about every single week, mostly in the broad market. We're going to include some crypto into that on occasions when we think it's important. You can sign up for free. And we also do in-depth technical and fundamental analysis on an institutional level analysis on the tech sector and crypto sector specifically, where we run a portfolio in real time of various tech stocks and crypto currencies and crypto coins that we like. And you can sign up there at the iofund.com. Thank you very much.